into Midcap Radar on CNBC TV18. Well, cable TV and broadband service provider GTPL Hathway is in focus post earnings. Reported a good revenue growth, but margins declined significantly, and that's the reason stock is lower by 3%. EBITDA also took a hit due to higher pay channel costs and other expenses. To discuss the earnings fine print, we are now joined by Piyush Pankaj from GTPL Hathway. He will be decoding the numbers with us as well. Piyush, thank you so much for joining us here on CNBC TV18. Well, as I pointed out earlier, your revenue growth has been strong, especially in the cable TV business. It's up 21%. But margins have declined 300 basis points because of higher pay costs. Can you explain to us what is the outlook on margins going forward? Will it continue to see an impact because of these expenses?
Yeah, thank you. See, the revenue has gone up. They are in the range of 17%, 18% margin, growth again for the YOY basis. But yes, the pay channel cost has gone up significantly also. As you know that we have implemented NTO3 from the beginning, from April onwards, and suddenly we have seen the increase in the prices in the ground, especially, and the cost also. So margin, if you see the quarter-to-quarter margin, as I said in the last call also, that it is going to improve and come up to 20% margin. Already we have up from quarter-to-quarter to 100 basis point. And we are looking forward that we are going to give this performance. And by Q4, we are going to be somewhere on 20% margin, back to our normal margin. And from year onwards, from the next year onwards, we are going to maintain those margins. So that's the target on which we are working. Already 100 basis point margin has gone up in the EBITDA side. And so that's the way. So we are adding good numbers. If you say this quarter, we have added around 800K in the cable side, in the YOY basis, and 120K in the broadband side. And we are close to 9.5 million subscriber base in the cable side and 1 million in the broadband side.
You're saying margins will be 20% by Q4 of FY23, right?
Yeah, we are looking forward that by Q4, we are come to the margin of around 20%. If you see 100 basis point, we have already recovered in this quarter.
Got it. I know, I just remember our last conversation, you had guided for 21% by last year. So just wondering if you brought it down to some extent. But anyway, moving on, this GTPL Genie, which is an OTT apps aggregator, you get access to 15 plus OTT apps. What's the kind of traction you're seeing here?
Traction is good over here, mainly in the broadband subscriber base. I will say that the number which is coming around 70% is coming from the broadband and 30% is coming from the cable subscriber base. Yes, it's early days for this type of product, as a lot of customer has taken some of our here of the apps, and they have taken it for 6 months on a yearly basis. But yes, we are getting good traction already.
What are the numbers, sir?
Yeah, number is somewhere around, we are close to around 90K right now, 90,000 in the overall scenario.
Okay, all right. Now to the cable TV business, because there's been a subscriber addition here. Is that something which is happening because of Metrocast consolidation? Or is it coming organically as well? And what is the growth rate that you're looking at here? What kind of addition are you seeing in the second half and next year?
Yeah, Metrocast, we have consolidated this year, this quarter, as we have did the acquisitions in the last quarter, in the end of the last quarter. And the numbers you are seeing that, yes, around 400K numbers, which has increased, is one of the main reasons is the Metrocast. Organically, we are doing the number this quarter, as you know that NTO3 has happened. And this quarter is more of the stabilization. So we have got around 50K to 60K number in the organic side, in the net. We are looking forward that we are going to close this year. It's more than around 10 million subscriber base. We have already reached to 9.4. And the numbers are coming back, and we are happy with that. And same will convert into the revenue and the margin also.
So on the broadband business, your revenue growth is close to was about 18% last year. A lot of the telecom companies are focusing very aggressively on the broadband side. Your ARPUs are close to about 460. In the next, say, 3 years, where do you see the ARPUs for the broadband business head? What will be the drivers to get to those, what are the big, levers or drivers for the ARPU performance from here on for the broadband business? And what can you guide on the 3-year revenue growth for the broadband business?
So broadband, if I talk about ARPU, we are not playing the ARPU game right now. It's more of a volume game, which is going to be there in the broadband industry. As we grow, as you know, India being the price sensitive, we have to keep the ARPU in the margin of 400 to 460. If you see from last 2 years, our ARPU is in the same range. The growth which is happening, some of the growth which is happening is because of people are going for the higher packages. So that is the growth, but we are not increasing the price in the broadband business. Broadband, I will say again, I'm repeating that it's more of like a startup business. Out of 315 million households, only 35 million is in the wire broadband. So still a long way to go for India, and still for all players, it is going to be good, as we are going to see that somewhere around 150 million subscriber base coming into the wired broadband in the next 3 to 4 years. And that's going to give the growth, tremendous growth for the industry.
Okay, take that point. Thank you so much for joining us. So that's the word coming in from GTPL Hathway. Higher pay channel costs is something that impacted margins this time around, but they're confident of getting margins of 20% in this fiscal itself. Thank you so much for joining us. With that, we'll slip into a break. When we come back, we'll get you more on the markets.